Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra, and on this special edition, we're going to be focusing on the Q4 earnings. The company on our radar right now is the Realty firm Arvind SmartSpaces, which has reported a 33% decline in the consolidated net profit at 9.3 crore rupees for the quarter ending March 2023. The total income has also slipped, about to 94.37 crore rupees in Q4 from a year ago period where we saw the total income at 163 odd crore rupees as well. But now to understand more insights about the bookings and the outlook as far as the real estate demand is concerned, I'm now joined by the company's top management. Mr. Kamal Singal joins in. He's the MD and CEO of Arvind SmartSpaces. Welcome, sir. Thank you so much for taking the time out for this discussion. First up, I wanted to get a sense of the kind of bookings that you have been able to clock in this quarter. And has there been a rise on that front, at least on a both sequential as well as a year-on-year basis?
Thank you for having me on the show. The year ending March 23 and the quarter ending March 23 has been a great year and the quarter for us. In fact, record-breaking in many senses. We posted highest ever fresh sales of around 800 crores, in excess of 800 crores for the year. And we also had one of the best quarters historically with the sales of around 244 crores, which is a growth of around 63% over the last year. The same thing happened in terms of volumes and the number of units that we sold. And we saw a very, very hefty growth of around 30% for the whole year and in excess of 100% growth for the year as a whole. But as you very rightly said, the financial numbers and the revenues in the books of account has come down. As you would be aware that real estate accounting standards, the way it works is that, books of account numbers reflect what you complete in a.
Sure. So, sir, you were explaining to me the rationale behind the dip in the profitability and the incomes right there. If you could help us understand, if you've had record sales and there's a considerable amount of growth both on sequential and year-on-year basis, why is it not reflecting on the top line and bottom line?
As I just said, we had a great year in terms of operating performance. The fresh sales, fresh booking, both in terms of value and volume, went up dramatically. In fact, we registered highest ever sales of around 800 crores for the year. And we also registered 244 crore rupees sales for the quarter as such, which reflected a growth of 63% for the quarter and almost 33% for the year as a whole. But naturally, this is not reflecting in the books of account. It is mainly on account of the fact that the way accounting standard works of late is that it basically recognizes revenue only from the projects which get completed in a particular period. For example, in this quarter, we did not complete any project per se from the point of view of getting building use permission, etc., from the authority in a formal way, and hence no fresh numbers from the fresh project could enter into the books of account. But this fact is also worth understanding from a slightly different context, that our unrecognized revenues have gone up from 1,000 crores last year to 1,500 crores this year, an increase of around 500 crores. Basically, this is a delta between what we did in terms of fresh sales and what came into our books of account. And because not everything could come into books of account, unrecognized revenues have gone up, while the sales has not reflected in the books to the extent we sold.
Okay. If you could also give me a sense of, in terms of segments, residential, industrial, and commercial, which are the key growth drivers for you currently, and going forward, which are going to be your key focus areas?
So we are very clear. We are very clearly focused on residential development. 95% or thereabouts is the component of residential in our portfolio, and that's how it's going to be panning out in future. We do a little bit of a commercial and retail as well simultaneously, but that's more like an adjacency to the residential that we do, but not in a very specific focused way. So this is going to be our focus area, and we will broadly remain and grow as a residential company.
Okay. As far as the on-ground real estate demand is concerned, you did talk about your particular sales have been quite robust and record in a lot of senses as well. If you could talk to us about FY24 as an outlook, because we are now seeing that we are at the end of the rate hike cycle as well. What will that entail for the demand on ground in FY24?
So as you said, some of the headwinds, mainly on account of cost increase and also interest rates going up gradually in the last few quarters. I think we have seen the peak, or we are very near the peak of these factors. In fact, cost increase has plateaued, and prices have actually come down to a certain extent. To that extent, I think we are hoping to see a very stable regime in the year 24. A stable regime for real estate is a great blessing. People are more confident about investment. People have that frame of mind of having bigger homes, having better
Yeah.
homes, having homes with their own lands and skies, as we call it, the horizontal kind of products with villas and plots, etc., selling better than the built up properties. To that
Yeah.
extent, a stable environment, rates peaking out or near peaking out, augurs well for us, and we hope that demand is going to be quite stable and healthy in the coming years and quarter.
Okay, and like you pointed out that we are nearing the rate, hike cycle, the end of the rate hike cycle, and also we are looking at inflation really cooling off as well. What would that really mean for price hikes going forward, sir?
So for sure, I mean, price hikes on account of commodity prices should taper down significantly, and that has been one of the major reasons. I mean, price hikes were necessitated to a large extent by that. And now that we are seeing and hoping that prices will remain stable on commodity side, prices should remain reasonably okay. So we don't see, I mean, apart from the normal healthy price increases in any industry that one expects to see, we don't see any major increases coming our way. And that's great. I mean, that's a good news for everybody.
Okay. Could you also help us understand, I remember reading up about, the news that, you also pre-sold some of your projects like within hours after launching. What is the reason behind, luxury homes, high-end homes, heavier ticket price homes getting sold as soon as they are getting launched? What does that really indicate? And is that sentiment likely to continue?
Yeah, so there are two aspects to that. One is how the general preferences in the markets are doing. So we've seen a great amount of traction in general, so to say, in the industry. We have seen post-COVID a very specific inclination towards products which are horizontal, which are little more spread out, which are little bigger, etc., etc. Homes are now also seen in the context of second homes, where you could go and do some sort of a recreation from your own properties rather than all the time going for a vacation outside. To that extent, preferences have changed, and they've changed forever. And this segment obviously is clicking better and it's clicked very well in the last few quarters. That's one part of it. But then selling within a few hours or selling great, and many of our peers have done that in a few projects that have been launched, and we've all been hearing about those. I think that has got a lot to do with how the products are configured, how the brand works, how the positioning is, how the overall package is. Real estate is not one product. I think it's a mix of so many things. It's a mix of place, it's a mix of price, it's a mix of amenities, it's a mix of brand, it's a mix of your track record. So when it is packaged well, and it is when it comes from a name or a brand which is trustworthy at the same time, I think a lot of things fall in place. And of course, it is backed by some great momentum in the industry in general. And that's when you see some of these stories and some of these kind of traction that we saw in some of these projects.
Right. So you've also announced there's an investment program of 1,000 odd crore rupees. Could you give us any more details on that? How do we see that panning out in the coming quarters? And, as far as your expansion plans are concerned, where are the new launches really going to come up in terms of geographies? You're already present in Ahmedabad, Bengaluru. You started working in the Mumbai metropolitan region as well. Where do we see you branch out going forward from here?
Sure. Geographically, you covered it well already. We are operating out of Ahmedabad, Gandhinagar, and Bangalore as three of our major cities. Going forward, this investment cycle of around 1,000 crores, I think apart from what we'll do in MMR and Pune as a market, both these other cities, existing cities, will take away 50% or thereabouts of our fresh investments. We have now some very definite plans of expanding in the third market, which is MMR and Pune put together. We see this city or these two cities as our further growth areas geographically, after having spent a lot of time in our home market of Ahmedabad and of course our second home, which is Bangalore. By the way, Bangalore is now becoming bigger than Ahmedabad. Last year, out of 800 crores, 60% actually came from Bangalore and 40% came from Ahmedabad. But yes, MMR and Pune is our new geography, and we are working very hard to get something going there. In terms of overall investment and where it will take us, 1,000 crore investment definitely is happening. We are nearing completion of this investment, and we should start hearing some firm project announcements in the coming quarters. Generally, as a thumb rule, 1,000 crore investment should give us anything between 4,000 crores to 5,000 crores of top line. And that's what we are targeting. And that's how the projects are being configured. And we hope that we'll complete this investment cycle sooner than later. In fact, the company, from the capital structuring point of view, is in a very strong footing. We have no debt as we speak. Company is debt free totally on a net basis. There is a significant amount of money which is getting invested from HDFC platform. And then the internal accruals too are pretty strong. We generated more than 200 crores of free cash last year. So all these three kind of sources of funds are available. And that's how investment cycle is going pretty strong. And we should be able to create a very strong pipeline in next few quarters.
Any particular areas where you're looking to acquire land, especially when I talk about the MMR region, sir, there is very less land to acquire. So are you also looking at redevelopment as a space?
Redevelopment, yes. I mean, we know that redevelopment is one space which is happening in a very brisk way. And there are a very special reason why a player like Arvind should be getting into redevelopment. Redevelopment basically needs a great brand and a trust and a legacy for the existing residents to trust and believe on, and that's possibly one of the most important aspects of making a deal happen. To that extent, we are very well poised. Arvind as a brand in the market of Mumbai is pretty known. We've got a very strong Gujarati connect there as well. And hence we see this as a great opportunity and working around it. MMR will see some action from our point of view for sure. Generally, we are not targeting a Mumbai as in South Mumbai, a price bracket of 60, 70, 80,000 rupees square foot. That's not something that we are trying for the time being. We are more planning to be in the outskirts, in areas like Thane, in the areas like Mulund, etc., where the prices will be more like in the region of 20 to 30,000 rupees. That's what the bulk of the market is, and that's where the action possibly is going to be stronger than the other segments. And that's what our focus area is in MMR.
All right, understood that. Well, thank you so much, sir, for being with us and sharing all the insights about the quarterly earnings. And here's wishing you all the very best for the coming quarters as well. Hope to touch base again to get more understanding about the business sentiment and the outlook going forward too. Many thanks for being with us, sir.
Thank you.
If you like the video, do like, comment, share and subscribe.